And thank you for subscribing to the show. Please like, share, and subscribe. We are on all major platforms: iHeartRadio, iTunes, Spotify, LinkedIn. You can find us on all major platforms where audio and video may be streamed. I want to thank you guys for tuning in tonight, because today we have a really special guest. You know, this comes close to my heart, real estate investing. For all of you tuning in, this is going to be a dynamic episode and a powerful episode, because real estate, I feel, is the most powerful thing, and it's the future of investing. We've been investing in real estate since almost the dinosaurs, since the major Egyptians. So today, I was able to pin down a very special guest, Mr. Lane Kawaoka for us today, and he is bringing us knowledge, wisdom. Mr. Lane has been investing for over a decade and now controls 4,200 units. As an owner of crowdfundaloha.com, simplepassivecashflow.com, and riaaloha.com, Mr. Lane is responsible for finding investment opportunities, analysis, and marketing. Mr. Lane is obtained a BS, Bachelor of Science, in industrial engineering, and a Master of Science in civil engineering and construction management from the University of Washington. In addition to an analytical engineering background, Mr. Lane has real world experience, and you're not going to get that anywhere else. He puts a wide range, and he takes all that knowledge, and he takes all that information, and he breaks it down for us. Man, he is here to do that today. So without further ado, without further hesitation anymore, I'm bringing my special guest, Mr. Lane. Thank you, sir. Thank you for joining me for the show.
Hey, Marcus. Thanks for having me, man. Hello, everybody.
Absolutely. Absolutely. So diving right in, tell us a little bit about yourself. You have been investing for a really long time, but you have a engineering background. Why leave engineering? Why leave the profession?
Well, let's face it, engineers don't get paid too much, right? Great pay out of college, but you got to work at a job that I didn't really like. So I was kind of grown up on this linear path where I was taught to go to school, study hard, get a good job, and work at that job for 40, 50 years. But shortly after college, I bought a house to live in because, again, that was the financial dogma that I followed. And I was never home because, like most young kids out of college that have professional jobs, you're the road warrior. They send you out on traveling assignments. So I was only home on Saturdays, so I decided to rent it out, and that was where I got the taste of cash flow. I mean, the rents were $2,200 a month. My mortgage was $1,600. I knew nothing about rent-to-value ratios, primary markets, secondary markets. I knew nothing. All I knew is that the delta was cash flow in my pocket, and that was a lot of beer money for me at the time. But then 2 months passed, and I was like, wait a minute, if I just keep doing this, I'll be able to fire my boss and get financially free doing this.
And that's powerful, right? Financially free. And for a lot of us who are diving in or haven't taken that first initial step, that's ultimately what it is. It's that financial freedom and being able to fire our boss and being able to free ourselves from the 9 to 5, the traditional 9 to 5. How did you find the courage to leave your 9 to 5? What was the income? What's the recommended income that you recommend for people to? Is there a percentage amount? Say if you're making 50% of your income, now's the time to leave in real estate.
Well, for me, it was like my time. I couldn't do both things at one time. But if you want asking percentage wise, I mean, yeah, I probably did exceed my day job income doing the side gig, the real estate stuff. But I'm a big proponent to, like, don't leave your day job if that's your highest and best use. A lot of my clients are high net worth, working professionals, guys making over 60, well into the 6 figures. So their highest best use is at their day job. If you're delivering mail or doing something, I'm not the guy to listen to, right? I work with more six-figure guys. So it's all about like figuring out what your highest and best use is. It might be at your day job or doing surgeries or whatever, cleaning teeth as a dentist or whatnot. But passively investing on the side in real estate is a great way to build up that second, third paycheck of the month.
That's incredible. So you touched on this earlier. This speaks home from me, but you speak across the globe. You've speaking at seminars, done masterminds, led workshops and communities. You're well known throughout the real estate community. You touch on this, and this is going to hit home because a lot of people are buying real estate right now. They're buying real estate in a pandemic, but you actually teach the opposite. Don't buy a home to live in, instead buy rentals. So why the mind shift, and why do you teach that in place of the traditional go to work, go to college, buy your first home, get a family, buy your first home, buy a single family and live in it? Why do you teach contradictory to that?
Well, I follow the numbers, right? People lie, right? Your mom's financial advice is a lie. Right? It was all created by financial dogma of these Wall Street companies. I mean, the whole 401k, I don't do that. That was just some kind of thing that the government and the Wall Street companies got in cahoots to get all the Americans' money into the Wall Street companies like Vanguard, Fidelity, all these mutual funds, so they can extract all these heavy fees out of it. It's all wrong, and that's what gets me fired up. It's like
it doesn't work.
The whole system is engineered to have you do this, and that's why it takes you 30, 40, 50 years to retire. It's mathematically doesn't make sense, and take something as like buying a house to live in, right? Like, let's break this down. I mean, if for most of us that live in a high price area, $600,000 starter home, you're going to need like $100,000 as a down payment. You could do that and straddle yourself down with a large monthly payment.
Yep.
Or you could go buy 4, 5, 6 rentals with that money and create more cash flow, and also make money with appreciation and the fact that the tenant is paying down your mortgage, your equity is building up, and pay little to no taxes with the tax benefits of those 6 houses. Do the math. The math tells you what to do. But I will caveat saying that most people shouldn't listen to what I'm saying, because most people are financially irresponsible and cannot kind of simply manage their personal budgets. And for those people, buying a house to live in is sort of like a forced savings account. It's like a piggy bank. Most people need that, right? But if you're financially responsible and you are able to manage your own personal finances, there's a dissonance here where there's a paradigm where you can don't buy a house to live in, instead invest. Numbers don't lie.
Numbers don't lie. Absolutely. So let me get this straight. You don't recommend, when it comes to stock markets, 401ks, traditional investing, you recommend real estate above that. Am I hearing that clear?
Yeah, I mean, real estate is a hard asset, right? Not some fake thing when the CEO of Lululemon says something stupid about women's pants and the stock drops 30%.
Right.
It gives you cash flow, right? So this is a big thing. Like, most financial dogma is predicated on this idea of accumulation theory, where you build up $2 to $4 million, which, if you're doing it, not with real estate, takes forever, by the way. But you build up this big mother load of money, and then you slowly take it out. But we're the opposite. We want to create streams of income today, so that helps us buy even more streams of income to build that up. Essentially, we're creating mini pensions that we get to partake and use today for enjoyment, or to build the nest egg even bigger. So that's the second reason why we like real estate. And the third reason is the tax benefits, right? Like, I pay little to no taxes, and that's why the tax code incentivizes folks like us to do that, because the government wants us to put money into the economy. They want us to buy apartments, houses.
Yeah, absolutely. And there's a huge benefit. There's a lot of benefits that, like you said, the tax code speaks to, and you cater to that. Do you do flipping? house hacking, wholesaling. What's your favorite type of real estate investing and why?
Yeah, so I do buy and hold passive real estate investing, right? I think when people normally think of real estate, they think of what you see on HGTV, the wholesaling, flipping. I don't do any of that stuff. To me, that stuff is noise. I don't do any of it. I mean, it's a great way to make money, but it depends, right? If you're a doctor, you're an engineer, you make over six figures, it may not be the highest and best use for your time. Eventually, yeah, you churn a lot of money. You got to put it to assets that create more income for you, and you got to get on the buy and hold bandwagon, the passive investor lifestyle eventually, because all that money that churn you're doing is all ordinary active income, right? I have no ordinary active income. All my income is passive, and it's taxed differently. I love wholesalers or flippers because they pay all my taxes for me. Keep doing that, guys.
Well, that's and I wanted you to say that because my audience needs to hear that, and I think they needed to hear that directly. Passive income, like you said, if you're a high income earner, your best time, the best value of your time is in that doctor's office, is maybe at your own practice, because that's the best use of your time. So they're gonna come to you for to maybe coach them and to lead them into alternative investments in real estate. For example, turnkey rentals, right? That's a caveat inside of real estate. And so can you speak to turnkey rentals? What's a turnkey rental for my audience here?
Yeah, so turnkey rental is like, a house flipper will take a kind of beat up house, they'll revamp it and put all the new roof, flooring, electrical, plumbing, like they'll fix it up real nice, and they'll put the tenant grade materials in, the LVT flooring that are sort of indestructible, not granite countertops, right? But like decent ones that is cost effective, right? And then sometimes these guys will even put a tenant in there for you. So you as the investor, landlord, can pick up these properties, and then it's turnkey for you. It's all done for you. You pay a little bit of a premium for it, but it's still way, way better than doing this on your, going into the stock market. I have a little video on my website where I kind of break down, like on a simple turnkey rental, you're making like 30% on your money every year plus. And if you don't believe me, you can check it out, simplepassivecashflow.com/returns, and download the spreadsheet and figure it out for yourself, right? Numbers don't lie. Verify this stuff for yourself. And this is where early on I was like, wait a minute, I'm making like 30% of my money. Why am I only getting 8% in the stock market or my mutual funds? Like, what the heck, right? Where's this disconnect happening?
So you talk about this specifically on your website and on your YouTube channel. What is your YouTube channel called?
We're kind of starting out the YouTube channel. We're kind of bringing it more down to most folks' level in terms of like more general personal finance. But if they want the more investor stuff, I would check out the podcast, Simple Passive Cash Flow, iTunes, Google Play, etc. I mean, I would say the first dozen podcasts are more tactful about buying single family home rental, remote rentals, because typically they're not going to be in the area that you live in. They're going to be more in secondary and tertiary markets. If you live in California, it ain't going to work out there. You got to go outside the state. But as I've kind of grown as a more of a credit investor lately, the topic material has kind of changed to more syndications and private placements, infinite banking, more of the tactics that the wealthy will use.
Absolutely. You touched it, so you skimmed over. I can't let you breeze past it. Infinite banking. So you use the model of infinite banking to fund your real estate deals. I saw and I read about on your bio, and on you're very well credentialed. So how do you use infinite banking, or what do you recommend infinite banking use as far as buying real estate, buying whole real estate?
Yeah, so kind of infinite banking in a nutshell, it's called several different things, but essentially is using whole life insurance, but not the kind of life insurance that your long lost friend from high school calls you up for a random lunch to sell you this crap. Right. It's configured in such a way where you have high liquidity, lower death payout, but it's kind of a loophole in the tax system where if it's life insurance and the gains from it, it's tax free. So that's the game that we play. So we put our money into it and we take it right back out via a loan to ourselves. And by doing this, we get this nice little bump on our money. We make a little bit of a yield, like 5%, but we take that money out and we go and invest it in a syndication, making higher, right? So you're making money two places. I will caveat this all saying it is a really good strategy, but I would say if your net worth is under $500,000, this probably is not for you.
Absolutely. Absolutely. You live by three rules when it comes to investing. What are they? And why are they the biggest three rules when it comes to investing for passive cash flow investing?
Yeah, so we kind of touched upon this earlier, but it needs to be a hard asset, right? So that's why I don't like stocks or mutual funds. It's all fake stuff. It can go up and down based on emotion. Real estate is a hard asset. Actually, it's a diversified amount of commodities: the wood, the land. The second rule is like it's got a cash flow. It's got to put food on my table today, right? On a month-to-month basis. Right now, if I want to buy a Maserati, I can go buy a Maserati. Luckily, I'm not, but I could, right?
Right.
I want to go to Disneyland. That's what cash flow does, right?
Right.
And then lastly, it needs to be leverageable, right? I need to use the power of bank loans, and like the government is giving you these government sponsored low interest rate 30-year fixed loans. They're begging you to do that stuff, right? They're even giving these tax
money.
They're giving you these tax incentives too to do it. I mean, go with the pitch to the outside corner and jack it out of right field. I mean, you got to do this. You got to be silly not to take advantage of this. Now I have these three rules because inevitably people always ask me, well, what do you think about like Bitcoin, right? It's like, well, yeah, it comes and goes, right? But I mean, you could make an argument that it is sort of a currency, right? Like, so it is an hard asset technically, like how gold is. But this thing doesn't put food on the table, right? It doesn't give cash flow. And unless you play in the futures world, which I think is even more volatile on something already volatile, I mean, you can't leverage this thing, right?
You can't. You're hedging. You're banking on the continuous rise of Bitcoin, and like you said, it's not something I can't go out and touch Bitcoin. It's not something I can place my finger on. And if I sell it, I sell it. I get caught up when it comes to Bitcoin because some people use it for investing purposes, and others talk about it as if it's an actual currency that they use to purchase goods and services and products. And so for me, which one is it? Is it that's why I get caught up. Is it an investment and just for an investment, or is it I don't know any merchant where you can go buy that Maserati in Bitcoin yet. They're not letting you do that. So it's a I don't think it's a tangible thing just yet. But Ms. Shanique asked the questions, the three rules. He talks about income, leverage, and tangible value. So having a tangible asset. Real estate is something you can go out and touch. You can smell it. You can look at the building. And income, is it putting money in your pocket today? And leverage, what Mr. Lane also talked about as well, is you can leverage this thing. So there's real estate. If there's properties appraised at $200,000 or $600,000, and I can go borrow on that property. I can take the cash. If I need immediate cash right now, I can borrow that money. That's what Mr. Lane is talking about and discussing here today.
And I'll add another thing on top of there. It's like the element of competition. Like any other bro can go buy some Bitcoin on his app. I don't want to do things where everybody has access to it. I want barriers to entry. I want things where it's an unfair advantage to myself. I don't play a game unless I have an unfair advantage, right? Like a single family home. You need about 20 grand to buy a single family home, right? Not many people have that. But not many people have a couple $1 million to go buy an apartment. That's why I like to play in that space. Right. So this element of competition is the thing. And what's nice about real estate is once you're in it, it's very hard to compete. It is a good old boys network for sure.
Absolutely. Absolutely. So let's say my audience member goes, they get their first investment property, buy and hold, they get tenants in place. How do you manage a property? Because you're in Hawaii, correct? And you have property all over the United States. You have in Houston, Texas, Alabama. How do you manage a property from far away, remotely? How do you manage your properties remotely? What is the best practices that you've discovered in your experience?
Yeah, so we use third-party property managers when I had my first single-family home rental that I lived down the street, and now, I mean, 4,200 units. They're third-party property management all the way. They're professionals. I'm sure I've had dozens of evictions. I don't know how to do an eviction, man. It's different in every state, right? Like, I mean, I don't worry about that. I don't know how to change out a toilet. I don't do that, right?
Right.
And this is where it's important to go into deals that cash flow, that have that buffer, that has enough, the rent to value ratios are in such a way where you have the money to pay these professionals to do this so you can scale your portfolio.
Absolutely. Absolutely. Were you I may have missed this and you may have explained this, but were you investing in real estate in 2008 when the real estate
I was
market
lucky. I was lucky just to be saving my money during that time. I didn't buy my first rental property until 2009.
Wow.
But
Wow.
the reason why we do what we do, we buy for cash flow, is we don't care what the economy does. We don't care what the real estate price is. There's always a question that comes up like, what happened to the real estate crash? I'm like, I don't care. If you buy properties, each individual property where the income exceeds the rents, and you stay within a zone of workforce housing where there's a demand for, right? There's so many dudes looking for places, good quality places to live, that are between $700 a month and $1,100 a month. We don't go to the high end because that's the stuff that's going to get killed through economic struggle, like a pandemic of all things, right? And we don't go to the low end, right? We don't go to the war zone areas. We stay in the middle, right? Right. So I mean, I don't care what the price of real estate does. I can choose when to sell it. And obviously I'm going to try and sell it in the highest times. But my game is cash flow, right? Why would I want to sell it? I mean, and who cares if the prices go up and down? It's cash flow. I'm buying income stream.
Absolutely. Absolutely. When I bought my first investment property, it was around at the time where everyone's value of their homes were going down, and everyone was complaining about, oh, my house isn't worth my house is worth $50,000 less, $100,000 less. I didn't care. All I cared about is that cash flow. Was I continuing to receive the same amount of money every single month, despite what the economy was doing? So you're absolutely right. What do you care? If it's a long-term investment, you shouldn't be getting into investing for quick gains. Or that's why wholesaling, that's why you're so powerful, and that's why you're so incredible, because you're speaking on something that I think more people need to understand. Wholesaling, flipping, it's nice, but it's another job. And if you're a professional, you don't have that kind of time to be receiving phone calls like, oh, well, this went bad at the construction site, this happened. So I'm with you. Absolutely.
Yeah. I mean, that stuff has its place, right? Like if you need to save up 20, 30 grand to go buy your first rental, yeah, you gotta wholesale houses or do something. I just think that to do that is kind of picking. There's so many things you can do to make money, right? I mean, you can sell drugs, you can do whatever. Like ideally, you want to pick something that's legal, but like, I mean, the way I know, I mean, I'm an engineer. I can just go to a W-2 job, right? That's it. Not however you make your money is up to you. Hopefully, you do it legally, but that's how you get on the path to passive income, is to buy and hold rentals.
Absolutely. So what are you seeing, brother? What are you seeing? What do you think is going to happen? You think have we made it through? Is there going to be a potential market crash? What are the numbers saying for you?
I mean, I do think that there's probably going to be more foreclosures happening next year, but I mean, I've been in this game for like a decade. There's always that kind of storyline. It's like the media, right? Oh, there's a hurricane coming, or that doesn't come, or like the world is gonna collapse, or something, or Korea's gonna. There's always some kind of storyline, and it frustrates me, and that's why I'm talking about it now. Is like, this happens every couple of years. There's always some kind of storyline, and it just freezes regular people from getting started. There's two sides of there's three sides of the coin, right? There's people that say it's a good time to buy, bad time to buy. But the sophisticated investors, they don't care because they know on the individual deal they're buying if it cash flows and if it's going to cash flow in a good time or bad time. It doesn't matter. Heads I win, tails I win.
Absolutely. So you how old are you? Quick question.
35.
You wear it well. You wear it really well. I would have never guessed that. So what would you tell if you could go back in time, what would you tell your 20-year-old self? What advice would you give your 20-year-old self?
At the time, I was kind of doing exactly what I should have been doing, right? Saving my money from my day job, being frugal, putting it to buy and hold rentals, and just kind of staying on that path. I mean, this is not a get rich quick scheme. This is a save your money and get rich surely game. If I were to tip myself off, I'd probably tell myself, yeah, don't pay down my mortgages, right?
Right.
I've made that mistake a few times. You want to take on as much good debt as possible, but I don't know. I haven't made that much mistakes because I don't really take much risk, right? I mean, when the properties are fiscally positive at the end of the month, then what can go wrong? I mean, things will go wrong, but that's what cash reserves are, right? To bridge those gaps.
Yep, absolutely. So what do you have planned? What do you have coming down the pipeline? What do you have coming up in store for 2021?
Just keep buying more cash flowing properties, right? That's same old, right? Properties that are stabilized, 90% occupied or more, larger apartments, bigger deals that have a little bit of value add. And that's it. Just keep rinse, wash, repeating.
Absolutely. So value add, guys, what Mr. Lane is talking about, when you buy a property, he's looking for properties with the potential to add convenience items. So prime example, I saw a 6-unit apartment building that had a storage space, that had a storage closet. Well, inside that storage closet had 6 connections for washer and dryer hookups. So I could potentially, if I bought that property, I could potentially clean out that storage closet, put coin machines, coin washers and dryers in the machine, in the closet, and now I have a value added service that I can now offer to my tenants. So I didn't want anyone to miss that. A value add is when you find a property that you can add value to your tenants that will obviously increase their happiness, their comfortability, and they're wanting to stay with you. This was a really good property because there wasn't a laundromat for miles. So that was the value add that Mr. Lane is discussing. So I didn't want anyone to miss that. We have a question.
What we normally do is like we'll change out the flooring and new appliances. We don't really get into the big stuff. We're doing maybe about $3,000 to $6,000 of rehab per unit, but that's enough to bump the rents up an additional $150. And we're not doing this out of the goodness of our heart, right? We're doing it so we can bump the rents up, so we can increase our net operating income. Because in these commercial assets, the value of the building is not based on the comparable sales like how residential properties are. It's how much we increase the revenue. So if I increase the rents of one unit times 12 months by $100 a month, so let's just call it $1,000, right? If I divide that by a 5 cap, so I go $1,000 divided by 0.05, I just created $20,000 of value right there. And now I'm going to do that to all 200 to 300 units. And that's how I'm going to create multi-million dollars of profits, by increasing the value.
Absolutely. Absolutely. We have one question from the audience. Is there a specific percentage of money you hold in reserve?
On each project, we hold a certain amount of working capital and cash reserves. Probably usually about like a couple months at the very least, or on some of these bigger projects, just a flat $200,000, $300,000 cash reserves. But that's on our, we're syndicators. We operate investments individually. But if your question is more for like just a random private investor, that's up to you, right? That's your level of how much you want to play on the table, right? When you go to Las Vegas, how much money do you throw down the craps table? Do you throw it all, or you keep like a 50 here, stuff 100 here? That's all up to you. And it depends on where your net worth is too. Like if your net worth is under $1 million, you got to get after it, man. It's not financial freedom there. You got to play the game. And maybe a prudent way of going is, investing most of your capital on the table. But I will caution and say, well, make sure it's cash flowing stuff, right? So you don't lose your shorts. If economy goes backwards, well, at least you can cash flow through that.
Yes, sir.
So it's a hard question to answer. It depends. But maybe, I don't know, maybe if you can kind of clarify the question, you can answer a little bit better. But that's my best guess.
Absolutely. No, that's a really good answer. I would take that answer. It's all dependent based. What is your comfort level? It may be 5%. It may, like, if you're Grant Cardone talks about he doesn't keep any cash reserves. He goes all in on every 10x, right? That's his thing. 10x, go all in. Don't worry about the savings. As long as you got cash flow, positive cash flow, everything else will take care of itself. So it's all comfort. You're right. You answer that, Mr. Lane. How can my audience get in contact with you or reach out for you for investing in the future and staying connected with you?
Yeah, they can go to my website, simplepassivecashflow.com. Again, if they're looking to get their first rental property, check out the first dozen podcasts on the podcast, and that's Simple Passive Cashflow on iTunes, Google Play. But yeah, thanks for having me. We appreciate it.
Absolutely. Thank you for joining us on the show. Thank you for spending time with us. I hope this message has been impactful. I hope this show was helpful to you all. It was helpful to me, and it's helpful to me to connect with like minds, because it lets me know I'm on the right path and I'm doing something right. But I get inspired when I meet experts in the field. So Mr. Lane, thank you. I appreciate you. Keep doing what you're doing. Stay safe, and thank you for what you do, sir. It's changing lives. It's changing the future. You're providing housing, right? That's not a little thing.
Right. Real value comes to those who create value, right? Wealth comes to those who create value, not people that just buy and sell things on Amazon and stuff like that, trading, but creating real value. And that's the value that we create.
Yes, sir. So everyone, thank you for tuning in. Thank you for subscribing to the channel. Thank you for checking us out today. Like I always say, take care of your friends, take care of your families, and take care of business. This is Marcus Norman from Gentleman Style Podcast and Mr. Lane from simplepassivecashflow.com. Thank you all. We love you. Goodbye.